Your career feels stuck. You're waiting for that perfect opportunity to come along. But here is the truth. Opportunity isn't something you wait for. It's something you build. Welcome to NISM e-learning, where your financial career takes flight. We are NISM's online learning platform. Whether you are starting fresh, switching careers, or sharpening your edge, we are here for you. Quality education, affordable pricing, zero barriers. No matter where you are or when you learn. Industry-designed courses from securities market veterans with decades of real-world expertise. From foundational financial literacy to specialized expertise, equities, mutual funds, derivatives, compliance, risk, wealth management, and beyond. NISM e-learning course covers securities markets areas comprehensively. This includes topics related to mutual funds, financial planning, SME listing and compliance, forensic investigation, anti-money laundering, and more. Every course is built with leading knowledge partners and academic experts, thoroughly vetted and constantly updated. Your journey starts now. Visit online.nism.ac.in today. Learn at your pace. Learn on your time. NISM e-learning. Build your future.
I head the Center for Content Creation at National Institute of Securities Market, also known as NISM. NISM is a public trust established in 2006 by the Securities and Exchange Board of India, SEBI, the regulator of the securities markets in India. The institute carries out a wide range of capacity building activities at various levels aimed at enhancing the quality standards in securities markets. As part of its mandate, the Center for Content Creation oversees all the digital content creation for NISM's e-learning programs and skill development modules. NISM now has a bouquet of 60 plus e-learning programs, some of which are actually free and some are developed in collaboration with our knowledge partners who are experts in their respective fields. These e-learning courses, as you just now saw on the promo video, are available on our LMS, which can be accessed at online.nism.ac.in. I'll be sharing the link details again in the chat window so that all of you can go out and check these various courses, which cover a wide area of topics related to investor education and the securities market. We have courses spanning foundational financial literacy to advanced, specialized, and niche courses covering a gamut of areas including mutual funds, equity derivatives, fixed income, AIF, corporate governance, wealth management, and so much more. Now, coming to today's knowledge webinar, this is being conducted by NISM along with our knowledge partner, Krish Consulting, with whom we have collaborated to offer 6 courses on anti-money laundering. So the webinar for today is titled AML Compliance, What You Must Do Now. And so our guest speaker and founder of Krish Consulting, Mr. Krishnan, will be taking you through a very good presentation. So, and if you're a student, if you're an aspiring professional who is exploring AML as a career option, if you're already a practitioner who is in the industry, or even someone who is a very experienced professional looking at anti-money laundering certification, you want to train your team, then this webinar would be very, very relevant for you. So without much ado, let me hand it to our guest speaker today, Mr. Krishnan. He will be taking you through a very nice presentation. And please type in your questions in the chat box or in the Q&A box. And, we will try to address the questions towards the end of the webinar. So Krishnan, over to you.
Thanks a lot, ma'am. Good afternoon, everybody. I'm so happy to be here talking to you all at another time on this very fascinating and very contextual topic of money laundering, right? Before I go ahead, can I just ask this question? Am I audible?
Yes, Krishnan, you're audible.
Okay. Sally, can we move on to the next slide, please? Okay. That's a brief about me. You can figure it out from my LinkedIn as well. It does that. It's a 35 years of work experience with 30 years in the industry and 5 years plus in this particular space of consulting. We're into consulting and advisory. I'm so pleased and proud to be an acknowledged partner of NISM, right? And we've been doing this for the past 4 years. Thank you, please. Riley, the next slide, please. So what we are going to do here is that we are going to be asking you a few questions for us to get a sense of what sort of demographics that this, where we have got over 350 participants at this point in time for us to know what the profile of the people is. So please take a few seconds to answer these poll questions. Sally, can we have the polls, please?
Poll is live, sir.
Yes, so we would encourage our participants to do participate in the poll. That gives Krishnan a good idea, who is the audience and, tailor it accordingly.
So we'll take another 30 seconds. Okay, shall we? Sally? Okay.
Yeah, we can end this poll. I think, Krishnan, most of our audience is new to AML. There are some experienced and experts around as well.
Yes. So we got almost quite a good number of people from compliance and 5% from principal officers and MLROs, which is, I think it's quite a range, right? It's perfect.
Yes,
This tells one thing that people are having less experience in the profile, but they're holding some very senior positions and positions of responsibility. So that's what is coming. We have just got a lot of new people with just 2 years of experience, but we have got a significant number of compliance officers and principal officers, so which is a very good way to look at numbers. So probably I will try to see how we can make it pretty fairly playing it to the various profiles, right? So
yes, and Krishnan, if you see the sectors, they are also diversified: banking, securities, insurance, payments, etc.
yes. So that is quite. And one thing that I want to, I'm hoping to, because that is the endeavor that when we are talking with Mrs. Kuryoko, is that we will be having a program which is common, right? It is something that is not going to be contextual today. It is going to be something that everybody in this audience, because we were expecting this sort of a profile when we conceived this, saying that it is going to be a cross section across the industry, across the various experience levels. So there is something that each of you, we hope, will be able to carry with you all at the end of this particular session, right? So we can have a really mixed audience, right? So next, please.
Yeah, Sayali, you can stop sharing the poll, and Krishnan, you can move to the next PPT.
Yeah. Okay. Who is this webinar for? As you can see, it is as we can see from here. I'm not going to be going all over again. There are 3 different levels that we are looking at. First is a fresh graduate or someone who is an aspiring professional, who, because you happen to be there or you think it is an upcoming field that you would like to upskill yourself, right? Or maybe you may want to pivot your career into that particular space. You will learn whether this is the right career for you or not, right? You'll also know what it takes to be a career in AML. But if you're a practitioner with less than 5 years of experience, what I'm thinking that you would begin is that what is the difference between doing compliance and doing an actual AML detection? Because there is I'm going to be spending some sufficient time to make this fine distinction, right? As to compliance is good, is very important, but AML as a part of is a part of your compliance that has got a slightly different variation that you need to be aware of. This gap is what is the real T. This is what separates someone stuck at a junior level from someone who has eventually will become a principal officer or your MLR. If you are a principal officer or a senior professional, then basically you have a responsibility. You're an accountable officer. You have a team which is effectively managing your entire portfolio. So we hope that you will be able to understand what it takes for you to be able to guide your team to meet with its obligations. So as far as today's content is concerned, take what applies to you at your current level, but also pay attention to the other levels, right? It may be of some help to you all, right? Let's get ready for the next. Yeah. So here we are talking of the recent regulatory push, right? Like for instance, we've been seeing a lot of action in terms of AML, right? Because I'm not going to be preaching to the converted, because I'm sure that as you come in, most of you are aware of what AML is all about. But increasingly, we have been seeing a lot of traction in terms of AML, especially in India, because 2 years back, FATF, the Financial Action Task Force, which is the regulatory body which oversees the entire AML across all globally, right? They visited India. We had mutual evaluation where we came out in flying colors. And that was a lot of effort that has been done consistently by the right from the Ministry of Finance to the various enforcement agencies to regulators like SEBI, RBI, to the various intermediaries like you all and all of the participants. It is not something that was done by one particular staff. It was a collective effort taken by all of us over a period of time, of course, thankfully led by the regulators who gave the right sort of guidance. And then as intermediaries, you all followed it. And then we have got a fantastic, and I'm told that we are come on the top 4, which is one of the very few countries which have got that sort of credit, right? So, but then globally, if you see here, you get a lot of intermediaries, large banks getting dinged for non-compliance, right? It doesn't mean that it's a small-time organization which didn't have proper structure, didn't have a proper team. We see some huge names that really are marquee names in whichever space here, whether it's insurance, whether it is banks or securities intermediary, you name it, the big names have got it. And it has also been that the fines are in terms of millions and billions of dollars. Sometimes you also seen the maximum fine of about $4 billion that has been levied as well. And also understand that the fines are disproportionate to the offense. Even if you had not caused any sort of thing, the very fact that you didn't have a AML program is good enough for you all to, for any of them to be penalized. Yeah. So the question that you should be asking yourself today is, what should I actually be worried about? It is not just, am I compliant? Please, I'm trying to help you look at it from a different prism, right? Although you're here because you've already been looking at, am I compliant? And probably you are. But we are trying to put together a different perspective, say, now that you're compliant, am I effective? What should I actually be worried about, right? So let's move on to the next slide. The idea is that you may be compliant 100%, right? You may be compliant 100%, but it may be on paper. You may have a very good policy. You may have a checklist that works. You may have a risk management. You'll be ticking every box that is as per the guidelines of SEBI or as per any of your internal procedures. But what the regulators are now looking at, they are not just checking if you have policies. They are asking, are you actually catching the bad guys, right? It's the quality of the pudding is in the eating. The party is over. We have matured as an organization, as an industry, and now it's saying that, hey, you've got all these frameworks. To what extent are you catching the bad guys, right? So let's talk about what your real job is. Next slide, please. Oh, 1 second, can you go to the previous? I just wanted to specify something which I missed. I think this is, yeah, okay. The previous slide. Okay. Here, what I wanted to tell you is that, let's take the example. You need to have a KYC done. So you collect all the various documents. There are 6 different documents that have been mandated. We have got a eKYC, VKYC, and all of it, right? We are doing we have gone way ahead of rest of the world in terms of digitization. Recently, SEBI has come out with accessibility guidelines, which I don't think any other country has got as much to that level of specification. Thanks to a Supreme Court intervention, we've been having that particular stuff implemented early this year, right? Somebody who's monitoring the alerts will say, I closed some 500 alerts today. And the various compliance certificates have been finalized, and then everything is fine. Everything is as per the tick box, right? But think about it this way: your job, if there's a security guard, right? The job is not to sit at the gate and check the ID and send someone in if that person is verified enough to get inside or not. Your job is to prevent unauthorized. His job is to prevent unauthorized guys from entering in. That's the job of a security. So this is the big difference that I wanted to highlight, which I will try in the next few slides. Yeah, we'll go to the next slide. Thank you. SEBI has come. So I'll leave the next slide. SEBI has come out with a couple of guidelines, right? We have a AML master guideline, which I think the last one was somewhere in about last 2023 is where we have had the one. We have had multiple circulars. Probably you people are much more closer to it, but the big one. Then what is more interesting is that we have also had some surveillance circulars and all the exchanges, right? I think NSE came out with a circular in 31st of December, then MCX came out on 3rd, and NCDEX on 2nd, and BSE, I think, on 6th. All in a matter of few days, I think all the exchanges came out with a certain circular which mandated, obligated, guided all of you all to do what is the right thing. So across all these things, the question that I want you all to fundamentally understand is the difference between what is surveillance versus AML. So we've been in the market for a long time, but it still gives a certain little bit of confusion. So I'm trying to put it the way I think is a reasonable way of looking at it, so that the rest of the you will be able to appreciate the rest of the conversation. Surveillance detects market manipulation, right? It means front running, insider trading. It could be a pump and dump, any of those sort of market manipulation techniques. It looks for crimes happening in the market, financial crimes, right? The goal of the market, it ensures that the security industry operates with a sense of fairness and there's an integrity in the market. That is the purpose of surveillance. AML detects money laundering. Okay, so where is the connect? So when a person indulges in market manipulation, there is a crime which generates certain income, criminal income, but that has to get legitimized. And to that extent, while market manipulation techniques it's a predicate offense which generates ill-gotten wealth, the way it is being brought into the system by way of layering and integration and all of that is what is AML. So today, and as a AML expert or your beginner or whatever it is, you will be looking for how the dirty money being generated from surveillance is being used in the market, right? These are two separate things. Surveillance will catch someone doing pump and dump in the market, right, of a penny stock by manipulating the pricing and all that stuff, right? That's a separate typology, and then how it does is another 1-2 hours of lecture that we can go on for. But AML will catch someone using multiple accounts, say to lay out 5 crores or 10 crores through the same penny stock process by laundering money. See the difference? There is an overlap. Market manipulation generates the proceeds, and these proceeds need to get laundered. So it has to be a part of my wealth. It has to be a part of my taxable, my net worth, which has been taxed, so that I can flaunt. There's no point me sitting on my house in a bed of some 5 crores of cash currencies, right? It has to get translated where I'm able to buy a nice little villa. I'm able to travel places. I'm able to drive some expensive cars so that I'm able to enjoy the outcome of that stuff. So this is what the AML does, and our job is to figure out, yes, people legitimately can use the securities market and then play the fair game and make money and enjoy and then get the fruits of labor. But what as an AML specialist that we are trying to do is the bad guys have to be caught, right? So that's what it is. Next slide, please. Here in the next slide, I'm talking about the, I have tried to make your entire job as an AML officer into 6 different components, right? So 6 critical components is what I think we'll try to have a sense of what it is and what it takes to master them. If you get any of them wrong, probably your framework is going to be not effective, and you may leave a backdoor for the guys to exploit, right? Or you always understand that the bad guys are shopping, looking around for who is non-compliant, right? Sometimes you'll find this is a market practice, and XYZ broker is letting this happen, and ABC is not doing this, but why are we not doing it? We are losing it out. So these are all the conversations that you would happen, and you would be hearing it too often. And some of these things are very clearly some ways by which the bad players are still lurking around. So what are the 6 of them? You have the KYC and the client due diligence, understanding who the customer is, right? It is just not collecting the documents, but truly knowing them. So that's the difference between KYC and customer due diligence. The second one is the risk assessment. In risk assessment, you're recognizing that not all customers are equal, right? Some customers are higher risk than others. As far as the third one is concerned, it's customer profiling. You need to know your customers better, so you need to profile them. If you've got about 100,000 customers, or you got about 500,000 customers, we also know some of your intermediaries like got even a few million customers. You can't create that many number of profiles, so you bucket yourself into so many different buckets, like a salaried person of that of a certain income level, right? Salaried person with doing a different business from this industry, or a businessman doing a retail business versus a businessman doing into jewelry, or someone who is only inward domestic, and versus someone who has got a cross border. So you create multiple profiles. So you bucket all your number of investors into one of these profiles, so that you're able to handle this better. Your entire stuff becomes something very chunky for you to manage, right? That is your customer profile. So if you have done all these things, then what you do is you start monitoring. That is your 4th component, which is your ongoing monitoring, and then goes to having done this ongoing monitoring. That process will generate a lot of alerts, right? Either physical, manual, or automated, and then which someone has to get in there and look at it and see as to whether is it something that you need to be worried about, do you need to do some action, or it's a false positive, which most cases are likely to be. And finally, you have your discussions with yourself at a very close, confidential conversation with a select number of people to say, is this something that we should be worried about, and file the STR. So these are all to give you a very quick, I'm giving you the life cycle of an AML officer in a regulated intermediary like yours, right? Each one is critical, right? If you miss one, you have a gap that the criminals will exploit. Like for instance, we have got a whole body. You're not going to feel very happy only if your hand is paining, right? You're going to have a sense of discomfort towards across the entire body. Your entire day is going to get horrible, right? Same thing. You can't say I'm only weak in this particular component, because that is not something that is going to make you good, and it can still expose you to a lot of issues. See, in my over 30 years of experience that I've been there, I've been consulting with very leading organizations locally and globally in the past few years. I'm sharing here with my little experiences, or where are the serious big gaps that I'm seeing. And you know what? These gaps are something which has been there for long, and it is something which is not going to go anytime soon, because they're going to stay for a long time, because it's always going to be an issue, right? First is, do we know what is the difference between KYC and CDD? CDD is being customer due diligence or client due diligence. Do we really know what it is? KYC, we'll talk about it in the next one, right? When you go into the details. KYC is basically collecting the documents, and customer due diligence is basically, do you know actually who your customer is, or what the customer is, what he is doing, and what sort of risk he or she brings into the table. The second one is basically the risk assessment stuff, right? Usually, I have seen many places the risk assessment is based on a couple of data points, basically as to whether that person is, what sort of income that person has, what is the account balance. A customer has got a balance of about 50 lakhs, as an income of 25 lakhs, has got an income of 10 lakhs. And therefore, this seems to be okay. So it's not a high risk. So it looks commensurating the income. So that is how, and then say it is the alert gets closed. So we will, this to me is meaningless. And this is the one of these core of your way by which your framework can get wrong. Real risk assessment considers a plethora of factors. The third one is basically closure of alerts without proper investigation. So when you have got not a very strong KYC, a customer due diligence, you've got only a KYC because SEBI has said these are the things that you have to do, and you're ticking the box, you're getting all of them in place. Your checklist is followed, your procedures are followed, you are fine on KYC, but you're short on CDD. You're having a risk assessment, but that is not effective, right? Then naturally the alerts that come will not be properly closed, right? You've got about some 859 alerts today, right? And then something like you're filing about 0.5% of that as your STR, right? Because you want to close out your queues, right? I know some of them, some of you could be working for the GCCs, working for the offshore. I don't know because LinkedIn, it's an open house, not specifically for India audience. So in which case you will have to close the queues in certain SLA. So there's a focus on how quickly you close, and then sometimes your quality can get compromised. So these three gaps is what the regulators globally are hammering the institutions for.
Krishna,
right?
sorry to interrupt you. Bexy here. We are 30 minutes into the webinar. I hope we have enough time. We
Yeah,
have 5
we have,
minutes for Q&A.
yeah.
Please continue.
So that is what is going to be there in the various three gaps that we find, right? The next one we are going is about the KYC and the CDD, which we have talked about, Saili. We talked about the first one, which is basically the difference between the KYC versus CDD, which is the critical difference being that one is you have got the documents, you know this is a person, but you are looking at the various documents and you are converting that information, that data into information. From information, you're getting some insights. And from there, you say, of my million customers I have, or if of my 10,000 customers I have, these are the 500 customers that I really need to be working on, that I need to be worried about. Here you see that I have an example of a person, Mr. Sharma, who has an export, import textiles and trading of about 10 to 20 lakhs per month. And he is doing it for hedging. And guess what? Suddenly he starts going berserk, and then the turnover goes something like 1 or 2 crores. Then that is something that, hey, this doesn't look like his routine, normal stuff. So there is a little bit of area that you need to fill. So that is where your customer due diligence comes. So KYC is the basis, but for an effective AML, you need to have your customer due diligence properly in place. Let's go to the risk assessment. How do we make it meaningful? Everyone does it, or at least they are supposed to do it. And I know for a fact that not everyone does it, because there is many of you are using your software. It helps you do something. So many of your risk assessments are software driven, which might be basically you're riding on the algorithms of the software vendor. And to what extent that is customized, again, is something that can determine how effective your risk assessment is. Assuming that you have done this, you say a customer has got an income of 10 lakhs. So his trading pattern today looks okay, so low risk. A customer has got 50 lakhs, therefore is medium risk, and someone has got more than 20 lakhs, so that is a high risk. And your risk assessment is done. You've got a couple of products. If that person has belonging to any of the others products, then it is low. Something like your real estate or your gems and jewelry and some of those things, then you might say is a medium or a high risk, right? But understand one thing, each of them may individually be low or medium or high, but risk assessment means a combination of these events, right? Like a high net worth individual who is into a real estate, has got cross-border transactions, right? Who deals with a lot of foreign exchange and all that stuff will be a high risk. Versus someone who has got a 1 crore investor but buys and sits on it, only cash, sits tight on it for a long time, could be a low risk, right? It is not actually the amount that matters. It is what is it that that person is doing with that sort of money that determines the risk, right? So source of funds, can you verify that? Is it a business income, family wealth? Normally, when you say it's a family wealth, you say, I don't know. Is it a trading gain, which could potentially be even a circular trading? So you have to go a little further than that, right? And then if you're looking at products, is it only for equity delivery, a cash, F&O, penny stock? So those variations, that person's profile will have to be closely monitored for you to do it, right? So your risk rating comes from combining these various factors. So next one, please. So we are now going to the third component, which is customer profiling. You have done your KYC, you got your documents, you're not done KYC. KYC is a process of collection, then you're done your customer due diligence, then you're done your risk assessment, then you need to profile your customers. What exactly happens is, the fundamental principle is you can't detect. What is the purpose of AML is to find some patterns and then the abnormal behavior. For you to find an abnormal behavior, you need to have a normal behavior. When you say unfortunately, if any of us has got a high BP or a high blood sugar is very high, we say high is with respect to something, right? 120/80 is the standard, okay? So then you say 120/80 is standard, but you're at 160, so something is amiss. So there is a normal and you're looking at the deviation. The same thing is what helps you, customer profiling helps you do that. You are creating a baseline, right, against which you manage your entire monitoring, right? So what is a typical, what should you profile? What is the transaction size? What is the frequency? What is the products traded? What is the funding pattern? Where does the funding come? Is it coming from one particular account or a lump sum, or coming from multiple credits are coming in? And what is the trading behavior? So these things give you the customer profile. So when this is the profile, this is a normal profile. You have seen that is 5 to 10 lakhs per month. Going back to Mr. Sharma's example, we got about 10 to 15 trades per month, and then large cap equity for delivery, buys and holds for a few months. And suddenly this seems to be the normal as you know him for the past few years. But suddenly he starts trading in penny stocks, some 50 trades a day. And on single day, he starts getting in some 50 lakhs. They say, yes, probably yes. But then let me do a little bit of checking, right? Do you see how obvious this becomes? Because you established a certain baseline and there is a variation. I'll give you a small example, one example that happened many times in a few years before in my career when I was working in offshore global operations of a large bank, right? There was a huge payout, FX payout, and a very junior officer. This was basically in the early morning shift, covering the Far East, I think, in that part of the world, and said, I'm going to call up the relationship manager. Said that he's walked up to his manager and said, I want to take a look at this. Called up the relationship manager middle of the night, saying that there is a transaction which I want you to verify with this for me. Then that the relationship manager, I know it's very uncomfortable, especially if you're dealing with people from outside of India to be at that point in time. But yes, and he gave instructions not to process it. Guess what? Next day, it turned out to be a fraudulent instruction. How did he? So I had an opportunity to just go through that stuff. And he said, Krish, this client normally pays about, maximum I have seen him pay is about $25,000. I'm not, in my 6 months that I've been here, I never seen something like $500,000 being wired out. So that was the simple stuff. That guy knew exactly what his client's profile was. And of course, we did encourage them. It became a sort of a case study, and then we gave him an out of tone promotion and the nice things that happened after that. Right? Very junior person, not even 2 years into, fresh out of college. Understand your customers. Some of your stuff, I know many of them are automated, but some of these things will give you some patterns. Now, having done this, the fourth component, which is next one, Saili. Here is where ongoing monitoring, here is where most things fail. It's just you set it all right, you buy a nice little software from vendors, and then it's all done. You say tick box, you spent money, you're gone live. What after that? Has to be serviced. It has to be maintained. Your client behavior changes. You have to keep tracking. So depending upon your low, medium, high risk profile, you need to keep having different ongoing monitoring. Monitoring is just not transactions, but also the client's profile as well, and qualitative when you're having some calls, the sort of emails that comes in. Any of those things will be something that you need to be looking at. Every interaction that you have with the client on the phone can also be an ongoing monitoring, because that person, the way he or she talks, the questions that is being asked can also be reflective of changing risk profiles, right? Um, Mr. Like some of you, like you might have joined an organization when you're, let's say 5 years back, your KYC would have been done there, and suddenly you find a huge amount of money coming in because your KYC was not updated. You're moved to 2 levels away, and then you're into an AML. You become from an entry level or a junior officer, now you become a principal officer in a larger organization. So you're definitely your income has increased, but your database of KYC has not been updated. So it is not that is always bad, but basically your ongoing monitoring helps you to reset the baseline time and again, right? So that is very, very important, so that you don't get false alerts. Sometimes you get some 10,000 alerts in a month, of which you say 95, 98% of the alerts are incorrect. If that is the case, go back to the database, go back to your original stuff, go and fix it, so that next time around, similar one does not happen. But do it after a careful analysis and documentation, right? Yes, periodic review is very, very important. High risk customers, maybe you have to do it annually. Your medium risk, maybe once in 2 years, and maybe everybody has to be done in a period of 3 to 5 years, right? Some of the low risk customers is just that you have to, like you see some of the banks, every now and then they ask you, can you please confirm your address and your phone number and all of them? No, it is basically they are doing a light touch, but a very effective KYC to say that at least the customers' demographics are appropriate, right? Now coming to component 5, which is the next one, which we are talking of alert review. Next one, please. Here we are talking of the real review. This is where I see many of the AML frameworks not being very effective, because most problems come here and then incorrect closure or insufficient investigation. The alert pops up, the customer traded something like 25 lakhs, but so what? His salary is there, and his demat account has got its balance, so it seems to be very normal, right? It just takes them less than 1 minute to close it, but that is not investigation. It is basically you're clearing the alert, right? You're trying to do something to reduce your queue, to close out your numbers. So what you normally do is, what is the profile? What is this person's initial trading? It's 5 lakhs per month, and suddenly he's doing something like 50 lakhs in the past 2-3 days. It's 10 times his normal. It's a red flag. So what is the source of funds? Let me check. Then ask your relationship manager, is there anything else changed? Go into the LinkedIn, some of these things. So try not to call up the customer and do this. There are these days, and this day and age, you can do a lot, right? You can do a lot on the through the secondary sources and others, right? So that is how you do alert investigation. And please be very clear that you are not going to be calling the customers and not even the relationship manager, because the relationship manager supposedly has a conflict of interest. So it has to be done carefully. So this is way beyond the scope of this stuff. I will definitely not be able to cover this stuff, right?
Krishnan, we
So
have 15 minutes left, so
yeah,
I think
yes,
we'll have
yes.
to move ahead
I'm
because we
almost
have
done.
several
I'm almost
slides.
done. Yeah.
Yeah, thank you.
So now we are getting into the last part of it. Now we are determining the alerts, right? These is alerts. These are the deviations and all that stuff. Then it comes to say yes, go or a no. Here is, should I file the STR or not? Right? What is the quality versus quantity? So please do. There is a requirement in India to say that you are supposed to file your STRs, suspicious transactions report, within 7 days of determining whether it is a suspicious transactions or not. The catch is many people take 2 months to determine as to whether that is a suspicious transaction or not, so that you can justify your trade. That is not going to fly more. You will get into trouble. So there has to be a sense of urgency in the way by which you file your return. So please go through the investigation, go through the entire process. You have to make sure that this is doubtful, so I'm doing it. That is called defensive filing. That is not supposed to be. You are supposed to look at the stuff, investigate, and have a reasonable ground basis which you are supposed to doing it with a very clear reasoning and rationale as to why you're doing what you're doing, right? So that is very, very important. You can't do just because you're in doubt. That's very, very important. That is what it's, but in war, guess what? There are hardly, if you see the data of securities market versus banking at all the places, they say, look, I'm not even accepting cash, so there's no suspicious transaction. There are hardly any suspicious transactions that you all would have filed, right? But sometimes it means that you're not doing what you're doing, right? So I'm not making I'm making a generic statement, probably you're doing it, but from what I see, many of them are not sufficient. You're not doing sufficient investigation, and that is how the STRs are not being filed. And this is something which is there. But when I speak to FIUs and all the global stuff, I tell them we don't accept cash. It has to come from one account and all that stuff I say, and therefore it's quite likely that the number of STRs that is being filed in India is very less in the securities industry is for a reason. And therefore it is fine. But I want you to be sure that your program supports this particular defense that I have for securities industry, or even SEBI will have for that industry, because an RBI has filing so many intermediaries are filing so many STRs, securities filed very less, is for a reason which can be easily justified. But will your program justify is for you to determine. Okay. Now the question is next stuff. Next question. Sorry. Next, yeah, we are talking of the technology challenges, right? Systems don't run yourself, because these days SEBI circular, the exchange circulars mandates, the obligates in terms of having technology fixes for your automated alert monitoring. So go ahead and make sure that you have it in place, but make sure that the alerts are customized to your requirements, and then keep fine-tuning the triggers time and again so that it reflects your profile of the customers. So if you get no alerts, it doesn't mean that you can be very happy. You can say something is, go and look back at your triggers. And if you get way too many alerts, go back and check as to whether we can optimize it or not, right? It takes some time for you to oil the stuff, but you have to get started with something. So please look back onto your past 1 year's data and then set your stuff, do whatever it takes. The real thing is to set proper triggers, right? The alert problem, and finally you'll have to the requirement. Right. All right. And we are at this point in time. We have there are 3 scenarios there. I'm not going to take all 3. I'm just going to take only one, which is where we have got a homemaker with a huge funds, right? Can we go to the next slide, please? Here is a yes, I'm going to take 10 seconds to say this. Whatever you do, please document it properly. Every documentation, your risk assessment, your customer profiling, everything has to be documented, accessible for, and then retained for a period of 5 years. If you're filing your suspicious transactions report, and then if some query has come in, you have to keep it till such time that entire process is over. I had prepared some 3 scenarios, but then there's a question coming up, right? Here is a question. Please answer this. 5 seconds. Are you responsible for implementing any of these AML circulars or your SEBI's? How do you find it? Is it very challenging, moderately challenging, not applicable? And what is your biggest challenge? I think I will skip the scenarios. We will play it on the screen so that so we got 27% of the people who are directly responsible. Excellent. You are part of the team that does it, so that makes it more than 50% of the people are something who are going to find this a little more relevant today. The second one is, how challenging do you find it? Very challenging is 24%, and moderately is, so more than 60% of them are having some set of challenges of now. Just pause for a moment. Here is a case where we are talking of a situation where a homemaker is with a huge funds, right? Doesn't mean that a person is homemaker cannot do that, because there could have been a family inheritance, right? Or could have been doing something from home. So you need to know your customer. That is what it means. The next one, please. So you here you're finding a case for a next sudden change in the profile. So which we discussed this. This is something that we have talked about in terms of sudden change. So we have talked about it a couple of times in the conversation. So let's move on to the next scenario. This is basically a case of a mule account where you find that many accounts are opened at the same time on the same mobile number where they use. But these days you have a lot of alerts that it restricts from using the same account or same email account, right? The funding pattern is the same, buying the same stock. You know, you can, these are all typical behavior of a mule account. Now, next thing, please. So there are, next one, please. I'll come back here. We have got some courses that have been made mandatory. Can you please answer? Can you go to this? Can you play this thing? Yeah, there's only one question, so I'm sure you would have done this. Should we close the poll now? So thank you all. I think CALM is 9% and others are AML. See, if you understand here, now we'll go back to the next slide here. The various exchange circulars have mandated that the principal officers would have to be CALM certified by 31st of December. And that's a huge number. So please make sure that you people have complied with, and then some of the jobs we will. Sally, can you move to go to the slides, please? That's possibly the last slide. Next one, please. We'll ignore this. Yeah. Here these are the three programs that we had at NISM. We offer about 6 programs, one for the securities market specifically, and one for insurance and accounting. But it's very, very important that you understand that people who are dealing with KYC, right? People who are dealing with KYC have to do a KYC module, and who are doing with transaction monitoring will have to do that specific, and all principal officers will have to do a 31st by 31st December. They will have to be CALM certified, right? So here is a thing. There is a career that you all have for whether you're an entry-level person, you're trying to pivot, you have a fantastic opportunity. And the next slide, please. I can tell you that this particular course has now started. You can start a career as a fresh graduate, fresh from college, start your career as a KYC analyst. And over a period of time, you can go up to a chief compliance officer, a money laundering officer for a global organization, because many of the concepts that you learn in CALM and any of the AML courses is universally applicable with some small modifications for the local regulatory requirements, right? Next slide, please. I think that is the last one. One last poll. And that brings me to the end of the entire course. Thank you all very much. Bexy, I'm 5 minutes late.
No, you're on time. We do have a little bit more time. So Krishnan, can we just go back to the slide? Sayali, we can go back to the slide on, the NISM e-learning courses, the 6 e-learning courses. If you can talk a little bit more on, who should be taking these courses.
Yes.
CALM is, of course, the longest course.
So there are 6 courses. So I'm going to talk of, see, accounting and insurance are all for specifically those for professionals. Then we have one APSM, as AML profession for securities market, is basically an end-to-end program focusing specifically only on securities market, right? CALM is a master class. It has about 47 modules. And then it is something which is exams are conducted every quarter. I think the second Saturday of the month, right? Like for instance, in December, second quarter, you will have the exam. So it is once in it is something which is a masterclass. It talks about across all the industries. So this is something which a principal officer or someone who is having a very senior responsibility or an aspirant who wants to do very well in an AML career should be looking for. Globally, this is a very, there are courses like CAMS and all of them, which charges you about $2,000. And CALM is something which is being offered at less than $100 or around $100. So you can say it's a very comparable
It's about
course.
60 hours, right? The content
It is
and
about
it's
60 hours. It's
online
about 60 hours.
self-paced. So
It is
you
about 60
all
hours.
participants
But
can come on to the online.nism.ac in. And Krishnan, you had talked about the courses which need to be mandatorily completed by 31st December 2025. Is it calm for those relevant
as
intermediaries?
I said, calm for principal officers. Anyone who is dealing with KYC and customer due diligence, that is, there is one for AML, there's one course, and then there's a transactions monitoring. The way I look at it, participants, is that go back to your office, take a list of who is doing what, right? Think of it like you are like a SEBI inspection officer coming and saying, okay, give me a list of who are all doing it. Take your thumb from your KYC onboarding system, who all have approved, who all have done that, and see as to whether they are KYC AML certified. Principal officers, senior people, are they CALM certified? Transactions monitoring, are they transaction monitoring certified? You have till 31st. Actually, this particular circular has been in place for almost like 1 year now, about 10 months now.
Okay, that's good. There is an
Any-
interesting question, Krishnan, which has come from our participants. Can AI replace AML jobs? What do you think?
That's something that I was actually expecting, right? Can AI replace? See, it again goes back to the first principles, right? The transactions monitoring. You have got quite a few transaction monitoring system that has now replaced what was a manual alert system, right? So now you get more alerts. You are able to see more data points. So your quality of risk assessment gets better. Your investigations get sharper. But imagine AI is no replacement for NI, natural intelligence. And AI hallucinates a lot. It can really cause you a lot of embarrassment. Please use it carefully. I use AI extremely very well, but you run the risk. Ultimately, it is your stuff. Use it carefully. And then you're sending a lot of information across on the AI to the stuff. So please be careful about your privacy and all that stuff. You never know what is going where. So please make sure that you're not doing anything outside of your office's data privacy and those issues. And if you're also doing it, please make sure that you have got a AI policy in the first place. But yes, AI is going to help, but will not replace. It will get much better, and you'll have more data points to look at. Your entire process will get sharper. Thanks for asking that
Absolutely.
question.
Natural intelligence over NI over AI. So I think there are a bunch of questions. We are running out of time. But I just wanted to ask Krishnan if you can clarify that these questions, the participants can get clarity if they go through our courses. So the questions are, I think you would discuss the case of the housewife, how to check the source of funds. So that I think you answered through a scenario one in your PPT. Then there are questions how to verify current income base of the customer. Should we need to investigate the source of funds and trust
Yeah.
the declaration given by the investor? What is the STR criteria for PMS AI? So can the learners get answers to these questions from the courses, Krishnan?
Absolutely. See, the beauty of the course that has been created is that it is agnostic to the industry and gives you the concepts. It is not your SOP which tells you what you should be doing in terms of fine tuning. It's not a product training program. It's a conceptual stuff. So most of your questions that you're asking for, what should be the criteria and all that stuff, will be taken care. But probably you may have to do not stop only with calm, right? You have to take the special immersions like KYC and client due diligence. I will encourage the principal officers to take even the other two modules, though that is not mandatory for the principal officers. I'll recommend that you please do it. When I say I recommend, because I should also declare that I
When
have
you
got
say
a
other modules, which two modules did you mean apart from CAM?
KYC and transactions monitoring.
KYC and transaction monitoring?
I just want to be upfront that I got a conflict of interest because I have created it. So I just want to be. It's not that, please don't think that I'm promoting the course. Yes, but in a way we want to make this clear. I'm just making this abundantly clear. But I would encourage you all to consider this. It doesn't cost you much because some of these courses are not even available elsewhere in the world, right? So take a look at it. Many of your questions will be answered, and we'll try to, we do a periodic refresh. So ma'am, I will just make sure that we create some case studies out of these questions and then update it during our next refresh.
Absolutely. So, we welcome all learners to go through the course brochures. I have given all the details of our LMS. And like Krishnan said, these are conceptual foundational courses. So after that, you obviously need to learn a lot more about what is specific to your particular industry, what are the guidelines set by the regulators in your industry, and have detailed SOPs, processes, to tackle this.
Another 10 seconds, ma'am, which one of the requirements of the principal, not this circular, your master circular of SEBI or even the PMLA is your annual training program. And you must be having very, very role-specific training program on an annual basis, on a time to basis. So please make sure that it is not your, SEBI and all of them, they have come extremely high in terms of what to expect from the intermediaries, thanks to the FATF and all these immersions they have got. So your inspection of SEBI, the SEBI's inspection is going to be extremely focused, and you might be in for some unpleasant conversations if you are not taking care of it. It's a very easy thing for them to catch is that your people are not trained, and it's a much easier thing for you to have them trained. So please make sure that not only they are trained, but ongoing training is very important.
Absolutely, absolutely. Consistent, continuous training to keep up to date with the circulars and guidelines is absolutely essential.
And documenting the training records of everybody.
Yes, which you have mentioned, Krishnan, in your
Yes,
presentation.
yes.
Dear webinar participants, thank you all for joining us. The webinar recording will be available on NISM's YouTube channel in a couple of days. So in case you missed out something, please do go through the webinar again. Course details are available on online.nism.ac.in. NISM also has two certification examinations on anti-money laundering, with the most recent one being launched for the GIFT IFSC ecosystem. So that also you will find all details, including the study material, free of cost on NISM website. We thank all webinar participants for participating here, and I hope you found the session useful. Thank you, Krishnan, for taking out your valuable time for our participants. Yeah.
My pleasure. Thank you all. Have a nice time. Have a nice weekend. Thank you.